Donchian trading channel. Also, I think if we take everything off the screen, which we can do, and put in our Fibonacci numbers, we simply go from the highs right here down to the lows, and you can see 83.59 is a 61.8% retracement. Takes us back to 84, the bottom end of the trading range. In this case, the bottom end of the Donchian trade channel. Longer term, we still have a negative, but mixed results because the weekly's up, the monthly's down. So let's see how that plays out. So let's go to our next market. And the next market we're looking at is the euro against the dollar. And a little pop today on the upside. I wouldn't get too enthusiastic about this, because we're getting very close to the upper levels of the Donchian trade channel. We're not there yet, but the indicators we have here, minus 55, it's a trading range. We are not getting excited about this market. Again, you have this divergence coming in right here. Let me just point that out to you. So we made a divergence, means like this. Give me all kinds of colors today. And the market just made a new high going like this. So that's a divergence. And it looks to me that this area here, right between the 123 and 124 area, is like a death zone for the euro, or thin air, whatever you want to call it. And I think we'll see this market eventually turn back down. We're still targeting the 120 to the 117 level. But every dog has to have a day, and this is the dog's day right here. So let's see how that plays out. And we'll go to our next market. Well, moving right along here, we're going to be looking at gold. Gold is, you remember we talked about gold being the top of the cycle, the top of the Donchian trade channel, like it was here. Well, it's deja vu, as all over again, as Yogi Berra used to say. But look, the action is not positive. This is not a positive move for this market. And let's take a look where we were. Let's see. Yeah, it's just, I just can't get excited about this market at the moment. It's still potentially building a base, but a plus minus 55 trading range. We're coming back down. I would not be surprised to see us go down to the lower end of the range, or the midpoint of the range, which would be 1590 to 1580, or that's the midpoint, or even down to this 1560 level, which is the lower end of the range. So I think that's what's going to happen to gold. So let's go to our next market. And that's copper. We talked about copper yesterday. We did not like the action in copper, and I think it bears the similar type pattern we talked about. So the market's come down. Let's get the right color here for you guys. So the market's come down. You had the move down like right here, and then we sort of rolled over, and that's what we're doing now, rolling over. Now this key level here, I think it's 3.3889 or something like that. If it goes below that level, it's going to put a PSAR sell signal, and I think we'll move down and test the 335 level and possibly down to the 330 level. So again, not a very good thing. It's saying the economic activities, if economic activity was so great, then this would be going up. It's not going up. It's really going sideways to very flat. So let's see how that plays out and go to our next market. And the next market we're going to be looking at is going to be silver. Silver, if you remember, we talked about this market had a big day yesterday, moved down to the Donchian trading channel, the top I should say. It's moved back in. I think that's going to be a little bit more on the defensive, and it's not going to go it alone. If it can't get going with gold, had a big rally. If it can't get going, then I think this market could come back down. But again, it's a plus 60 trading range. We're at the top of the trading range. We were overbought. Now it's coming back down. So let's go to our next market. And the next market we're looking at is the Reuters Jefferies CRB Index. Now, this is a big one, and let me just explain what I mean by that. Is if we close down here, we're trading at 299.64. We already are setting this market up for what I consider to be a negative engulfing line. So if we look at this action right here today, we would call this some would call it a bearish engulfing line. So what that means is it is basically a line that actually goes over the high and goes below the low. So it opens above the high of yesterday and closes below the low of yesterday. So if it closes this way, like here, let's say this is today's action, closes here, and then tomorrow we see this market do this, another red bar, then this is a top. And we'll see this market come back down probably towards the lower end of the this range. I would say maybe around the 290 level. I would not rule that out at this moment. We have certainly a market that was overbought. It's less overbought today, but nonetheless, the grains have a little bit of pressure on the grains, a little bit of pressure on the gold, and of course the crude oil, all of which bears pressure on this index. So let's clear that screen and let's go to our next market. And the next market we're looking at is going to be some of the bank stocks. JP Morgan, for example. I think the market's going to really cue off the bank stocks. As you can see, this market moved out of it's out of the range of the top of the downtrend trade channel. We talked about this again last week, and we're moving back in. And it looks to me like this market, like a lot of the bank stocks, are beginning to once again roll over to the downside, which means I think we're going to at least test this level here around the 33 level on this particular market. It's currently trading at 35.98, around 36, so I think we'd see a 10% pullback in this market. So we were overbought, not quite so now, but I think we'll still see this market on the defensive. So let's clear the screen up, go to our next market, and we're going to cover a bunch of bank stocks here because I think it's really kind of an important level. Now, Citi doesn't look quite so bad, but it's the same pattern there. Bank of America is looking crappy. I mean, come on. This looks to me like you just can't get anything going. If you just look at this chart, first of all, we've got our monthly and our weekly negative, okay? Minus 85 is a downtrend. Okay? And so here we have, boom, we go down, we come up a little bit, we go down again, we come up a little bit, and I think we're going to go down again. So I think this market's rolling over. I think come the end of the week, I think we'll see this market lower, and it's certainly lower for the month. Can't get excited that way. So I think you're going to see this market under pressure probably Wednesday, Thursday, and Friday. So let's see how that plays out. It's not a guarantee for sure, but it looks to me, it just looks tired. The market looks tired. So let's clear the screen, go to our next market, and that is going to be another bank stock, I'm sure, and it's Wells Fargo. Wells Fargo, if you may recall, was probably the best out of a bad bunch, but that again touched the top end of its downtrend trade channel. It's coming back down. I still prefer this over Bank of America. As I said, I'd rather be a buyer of this particular market and a seller of Bank of America against it. That's how I would view these markets right now. So let's go to our next market, Goldman Sachs. Goldie is looking not too bad, not too great at the top of its range. It looks potentially like it's trying to build a base. Not sure it's going to do it right this second. So plus 70 is better than a 55, which means it may be emerging into an uptrend, but the longer term trend is still down from 110. So we'll see how that plays out. Morgan Stanley, on the other hand, is really kind of at the midpoint. Again, this is similar to Bank of America. And if you just look at this similar pattern, you're coming down, rolling over, coming down, rolling over. And I think if we see this market take out the 13 level on the downside, then I think we'll see this market under a lot more pressure. We are overbought, kind of like we were here and here. Remember that? So we have to wait till we get down to these levels, even just for a trading turn. So right now you're at the upper end of the line, which means you really should expect this market to come down from where we are right now. So let's see how this closes out and how that plays out today. So let's go to our next market. And this is FAS. Now this FAS is a directional financial. We talked about the banks. We're currently trading at 22.22. I would say this market could close over, and it's a big if it could close over the 22.60 level today, it would indicate that this is in fact a low. And if you look back on this market, now it's a highly leveraged ETF, so it's not for everybody, but you may want to take a look at it. So let me just put my indicators on here. So here we are, you're down here. Look at this. We're down here. boom, you go. So this is the equivalent. Boom, up here, down here again. You're down here. Boom, this is the equivalent. And you're down here again. Now, what would you rather do? I think probably you want to be a buyer and look for this market to get back over this level here. And I think that's how the market's going to go. So let's see how that plays out. But generally speaking, you've come down this level, this level, this level. And every time you've gotten down to this level, it tends to pop right back up. So there may be an opportunity there for you. So let's clear the screen. Also, our trade trends, minus 60, it's a trading range, but our weekly and monthly are positive on this market. So something to look at. So let's go to our next market. And the next market we're going to be looking at is the SDS, which is a pro-short, ultra-short S&P 500. And that looks like it's trying to make a turn. Again, you're down towards these levels. Very similar to FAS. You look at this market and you say to yourself, okay, you're down here again, right here. You get up here, it's kind of around there. Down here again, down here, boom. And but the problem is it's really not getting overbought that much, and that's the key thing to look at. So I think right now we're going to see this market perhaps pop up. If nothing comes out of Europe, nothing comes out of the Fed, and the employment numbers are lousy, this market's going to go up. So let's see how that plays out. But before we do anything else, let me just finish on this one note, because I think it's important, and of course education is very important for every trader. But having some of the best, if you're a professional athletes have coaches, and that's the point we're making here at Market Club. One-on-one Market Club coaching is like having a professional coach work with you. And that's going to help you make more money in the markets, in my humble opinion. It's a free consultation. The call is free. If you haven't called us yet, give us a call, 877-219-1482. Our goal is to help to make you a better trader, and we believe we can do that more effectively on one-on-one with you personally. So give us a call today, 877-219-1482. Hey, I'm Adam Hewison from Market Club. I'll see you tomorrow, same time, same place. Have a great trading day.